Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Well, welcome to another episode of Kiss My Assets. We're excited to have one of our favorite investors, Rick Woodcock, with us today.
One of my best friends.
And one of Heather's best friends.
Yes.
Thank you.
Thanks for joining us.
Yeah, it's a pleasure.
We're going to find out a lot more about Rick, but one thing to start out with is he is a bit of an international snowbird in some ways.
Yes.
Has another home in Mexico, Mazatlan area.
Yeah, we're an hour north of Mazatlan. It's a town of about 10,000 called Cruz, and it's primarily an agricultural town, but a beach there, and it's very enjoyable place to go. We enjoy it a lot.
Well, we were just talking about it. Tell us a little bit about your schedule. How often do you spend down there versus up here in Arizona?
Well, we typically go between Christmas and New Year's. This year we went down for a birthday party for my father-in-law, which was on the 28th of December. And then we're back and forth. I always come home for the Phoenix Open because my son's very involved in that. And the first or second week in February, and then we're back down again. And so back and forth down there for typically a month to 5 weeks at a time, and then back here right now. We're home, and so we have down there. It's just starting to warm up, hot and humid. So we have hot and hotter. Now we're up to where it's hotter.
Right.
Yeah.
So it isn't a snowbird get away from the Arizona heat because down there it's just as hot.
Well, yeah, no, in the wintertime it's gorgeous. It's beautiful. I mean, it's not humid. It's very fresh. It's so funny to see the population down there all bundled up with jackets and earmuffs on. I'm walking around in tank tops and
Right.
flip-flops, because it is very pleasant. Yeah.
And you were saying you drive down
Right.
back and forth. And
Yeah. It's about a 15-hour drive, and I break that in half typically. We leave here, mid-morning and stay someplace halfway to a little bit further and then come in the next day.
so I know that there's sections of Mexico that they recommend you don't drive through. But Mazatlan is in Sinaloa, which there is some cartel activity there, but you've been doing it. And
Yeah, and you know what? I don't do stupid things. We don't drive at night. I don't mind driving early in the morning. Typically before sunrise, I'll take off. There's not traffic or a lot of activity. And then when the sun sets, we're finding a place to stay. And the toll roads down there are extremely developed now. And so it's a fairly easy drive with good traffic and a lot of military police presence. So I've never been insecure making the drive.
oh, that's great. It is a drive that I want to do. I love exploring, and I love Mexico. So
Mi casa's tu casa.
yes, I want to drive down to Baja at some point and get all the way down to Cabo, and then I want to go down mainland. So
Well, actually, you should go take the mainland route down to Mazatlan, and then take the ferry over to La Paz,
yeah,
and then do Cabo, and then drive back up La Paz. We
that's
did
what I'll
that
do.
For Bike Week in Mazatlan on Harley a few years back.
And they'll put your vehicle or your bike on the
Yep.
boat.
Mm-hmm. Like a beautiful big ferry boat with cabins. You can have a private cabin or not. It's an overnight boat ride from Mazatlan over to the Baja.
I feel like you always say yes to a private cabin.
Yeah.
Yeah,
That's always a yes.
Yeah.
yeah. And how long of a ride is that?
Well, it's overnight. We
Oh,
left
wow.
Mazatlan at 4:00, and the next morning by 9:00, 8:00, we were in the port at La Paz.
Heather, I don't think I introduced you. So we also have Heather with us. We started talking about Mexico.
Yes.
So our investor relations queen.
Yes, that's
And
the
specialist.
right title. This is good. I've trained you. And all I know is I'm coming with one of you, whenever this trip is happening.
Mi casa's tu
Yes,
casa.
Well,
I'm
you
coming.
will?
I understood that Spanish. Yes.
Great. So wanted to learn a bit more about your background. Are you retired now? Do you still work?
Yes, no, I've been retired I'm 74, so I've been retired when I was 63.
Yeah, and what did you do prior to
I
that?
worked in the manufactured housing industry, and I worked for a company here in town called Cavco Industries, which was a company that started here in Phoenix. But that was the later years of my career. When I ended up in Phoenix, I went to work for Cavco, great company to work for, and they're still here and very productive, very solid, publicly traded company, Cavco Industries. They've been purchased out from their private ownership and become a public company. And we placed most of the manufactured housing in the retirement age restricted parks out in the East Valley and Casa Grande and throughout Arizona.
So does Cavco manufacture their own mobile manufactured homes, or are they a reseller?
I'm glad you corrected yourself on
Yes.
that mobile home factory built housing. Yeah. They manufactured. They had presently there's 3 plants. Well, there's 2 plants operating. One down on Durango here in town, Durango Street. One out in Litchfield Park, and then they're just opening a brand new facility for their RV park models, which are 400 square feet and smaller, up on I-17. I haven't seen it yet, but they're starting to advertise. I noticed on Facebook now promoting to hire employees, which, as we all know, is a very difficult challenge right now.
Right. Wow. So the 400 square foot, that's a lot smaller than your traditional
so they have 2 divisions where they build their traditional manufactured housing, which can go up to triple wides, well over 3,000 square feet, and then 400 square foot park models, which are considered recreational vehicles and are built to recreational vehicle code. And those are what we call the park models, the tiny houses.
Tiny houses.
Yeah,
Tiny
we see every place. And they've been building those for years. Yeah.
It's funny. Those have been around for a long time, but
But
now they're
very on
becoming
trend.
very cool
Yes.
to have a tiny house.
Yeah.
I actually grew up in a triple wide because
Okay.
my dad was had a mobile home, manufactured home dealership. We did call it mobile home back then.
Back in the day, they were trailer houses.
Yeah.
You betcha.
But we had a triple wide that no one knew was actually a triple wide on the foundation. And he said, if I'm going to sell manufactured homes, we need to live in one. And
Okay, was
that's
that
what I
in
grew up
Idaho?
in. That was in Idaho.
What was the name of the dealership?
Brett's Mobile Homes.
Brett's? Brett's.
Yeah.
Well, there was a Brett's up in Missoula that was a RV dealership up there, but
Probably. Yeah.
that's
his first name. Yeah.
I started in the business in November 1970, and I started at a plant in McMinnville, Oregon, owned by Skyline Corporation. Skyline had plants in the Northwest. They had 32 plants at one time, and plants over in the Napa Valley, Idaho.
Yeah.
And that's the reason I asked the name of the business, because I knew a lot of those people. Not so much the mobile home guys back in those days, because I was an RV guy when I originally started. Yeah.
Yeah, it's a great industry, affordable housing. They're some of those homes. They're brand new, they're beautiful, and they're kind of having a resurgence now because the price of housing is so high.
Well, and if you have you have lots or vacant ground or acreage or places, it's hard to get a builder to go out and build on those. And factory built makes a lot of sense. And the code has come so far. The quality, they're all drywall, tape and textured, and tile roofs, and the same types of amenities you find in traditional site-built housing. So, and there isn't a great deal of difference in the cost because the materials are about the same.
Yep.
The efficiency, though, of getting it built, getting it placed, and getting it livable quickly is a real advantage in manufactured housing.
Right. So you started early on in your career, and you spent your whole career in the RV.
In the RV and manufactured housing. I worked for Skyline for 20 years in McMinnville, and eventually I moved to their corporate office, or I was sales and marketing. That was my whole career, was sales and marketing, although I did start out in the factory as a trainee when I was 20 years old, learning how to pound nails. And
That's a good place to start.
Yeah, it was, and it gives you a good basic background.
So when did you start investing, and then before you came across Neighborhood Ventures, what other real estate investing have you done?
Well, I have learned plenty of lessons in the real estate business, and always real estate's always been good to me. But sometimes it's a lot of work, and as investing in general, I started early on when I started in the manufactured housing business. We had at that time they had profit sharing. They didn't have 401ks and IRAs and those types of things. So the company shared this profits with the employees, and every year you were 10% more vested in the program until you were 100% vested, and of course that was the hook that kept you there at least 10 years.
Right.
But that's how it started with me. I was going from a job making $2.25 an hour at Skaggs Drug in Missoula, Montana, right at going to college, and I got this opportunity to go into the business, and I immediately made about 50 cents an hour. I was thinking like 275, and I remember my mother-in-law telling me one year, if you ever make $12,000 a year, you'll be doing pretty darn well. That's taxes now. But I've been very lucky, and I did. Early on, I would buy a piece of property and invest. A duplex. I owned a duplex early on. I had several different rental houses, and then I got a little more passive. And as your money grows, your retirement growing in your 401k or IRA, whatever your plan is through your employer, you're gaining money, but you're not really investing that money. Somebody else is investing that money for you, and so you got to put money aside. I think the biggest thing about is it's the tortoise and the hare. You got to be consistent. And you just got to keep doing it. You got to have the discipline to do it. And fortunately, and I was always one that worked for the man. I didn't, I was not the entrepreneur. I just was never raised in that environment. Sometimes I wish I had been, because I have a lot of respect for entrepreneurs and guys that are really willing to risk it all on programs and opportunities. But when you're working for the man and you're in a corporate environment and you're working, I'd say 8 to 5. It was never 8 to 5. It was 7 to whenever. Turn the coffee pot on when you get there and turn it off when you leave. But entrepreneurs are looking for opportunities all the time and taking advantage of those, and that's difficult. So I just did my daily investing, and fortunately, as I grew in my jobs and my income allowed, then I started doing different things. I'm investing in honestly, just basic stuff like we're talking real estate opportunities, and occasionally along the way, you'll get exposed to that opportunity. Somebody will say, hey, somebody somebody that you maybe had a business relationship. If you've developed a good relationship and a credible relationship with people, they say, hey, we got an opportunity. You interested? And then your teeth start chattering and your hands start shaking, And then, wait a minute, I got to make this decision.
And that's when
how much?
The entrepreneurial spirit has to come through, because you are taking a risk. Maybe it's not with your day-to-day time like an entrepreneur might, but it's with hard-earned money that you've saved.
Well,
and every investment, you have to have that take that leap.
When we look at this market right here in Phoenix, and I was in the manufactured housing market when we were at the peak of building. Maricopa County in 04 or 05 had 60,000 building permits.
Yep.
I just saw on TV the other day, last month was like, or last year, anyway, so it went from 60,000 in 04 to 3 years later, 6,000.
Yep.
And everything collapsed. There were subdivisions that were half built. Model centers and everything,
Ghost towns.
But look at where'd it go?
Yeah.
Where did it go? Where are we today? And I mean, look at what's happened just in the last 5 years with the value of property. So you gotta have. I invested along the way in outside things that I didn't have to be too active in.
Yeah, you kind of mentioned you had a duplex at one point, and you'd been a landlord, and then more passive. For people who are listening, who are just learning, kind of tell us the difference between those.
Well, here's the difference. At 2:00 in the morning, when your tenant calls and says the water heater's out, or the furnace isn't, well, the furnace not so much here, but who's gonna do that? You are it, unless you hire a property management company, and you're gonna pay 10, 12, 15% to a property management company to take care of that with you. Well, that eats up your profits and your gains and everything else. So I didn't like that. I never liked that. I liked opportunities that presented itself where you were a kind of a passive investor. And honestly, the biggest one that I hit the home run on was in Florida when I had one of my dealers down there, a park owner who developed parks. I developed a relationship with him because we were building his houses for his parks, and he gave me the opportunity to get involved in a park.
Yeah.
Now it was a long haul. We had the opportunity to get out and. In 3 years after we went through the initial zoning process and entitlements and all that stuff, we could have got out with a nice return, but I didn't need to because I was working. I still had my job, and everything was going well. So, I stayed the course, and that was probably the biggest, best hit I ever had.
Yep.
Along the way, everything else kept compounding. You ever heard of the rule of 72?
Yep.
Okay. That was something that just somewhere along the line somebody told me about that.
Why don't you tell us a bit more about that?
Okay. Well,
tell me, Rick.
Okay. I don't to say this simply. You take 72 and you divide it by the interest rate you're getting on your investment, and that'll tell you approximately how long it takes to double the investment.
Okay.
So let's say you're getting 10% return and 72, so it goes in there a little over 7 times. Your money will double itself in 7 years. Okay. So, gosh, what does it do at 12%?
Yeah. Yeah, like 5 years, 5.5 probably.
Right. Yep. And that's what I talk about, the tortoise and the hare. You got to stick with it. You got to be diligent about continuing to invest. And when I got involved with you guys, do you know how I found you?
No, that's something we always ask. I'm trying to remember.
Well, I was, back from one of my trips to Mexico, and my Ahwatukee Foothills Times was laying, on the front porch, and I picked it up, and they had interviewed you guys, and I thought, wow, this is interesting. 12%. Oh man, that's a awfully good return, and
for passive investment where you're not.
Yeah, very much so. And I had done. Let me regress a little bit. I had done a couple of deals where I'd gotten sideways and had to go through foreclose. That's the other thing. If you get into that side where you're doing it yourself, you got to be diligent and follow through and take action. And that action can be very painful sometimes, but you got to.
And it can involve attorneys and other things that
absolutely
isn't that fun. Yeah.
Yeah, and as I said to Heather earlier, you never know whether you have a good attorney until you're so deeply embedded with that attorney that it's too late to turn around and make a change. So, but anyway, the manufactured housing was one that gave me a real head start. And during that process, I was doing these other things, and I'd found several companies. One up in Utah that I was paying. At that time, the rates were much higher. They were paying me probably 10% or so, and they were group, taking that money in, and they were lending it out to developers and different things, different entities. So I wasn't directly involved in investing in those things. I was just giving my money and I was satisfied with getting that nice, what I consider to be a reasonable return.
So you can get a double-digit return with real estate. And you were saying how you found us. Ahwatukee magazine. Right.
And I just made the call,
And so it was an article about the company.
Yep. Group funding and what it was, it kind of explaining that overall. And one of the things that attracted me was that as opposed to being with, and I had been with this one company that was paying me a nice return, they had dropped their rates. I took my money out. And then they called me and asked me to put it back in. They were doing a project, and I ended up having to foreclose on that deal. It got really ugly. I got all my money out, and I was, lucky to recover that. But I didn't like the fact that I was invested with them, and not. In this case, I'm invested with you guys, but I'm in individual projects. Yeah. And you know what? along the way, if bad decisions are made or a bad project happens, to who knows? You never know what's going to happen. But it's not all sitting in one project, dependent on one set of circumstances to make that happen.
Would Heather always knows this because she does her homework. But the projects that you have invested in, and has there been some that we've done that you haven't invested in as you look at them? Is there some you're more comfortable with than others?
No.
Yeah. So you invest in most of them.
I've invested in everyone I've had an opportunity.
Yeah,
I started out, with a minimal
projects.
investment.
Yeah.
I think 7 projects.
7?
Yeah.
Yeah, wow.
Yeah, I think that's when you found out about us.
Yeah.
And then
I started with the first investment, and then you want to see is the transparency really there? Is that is this all lip service and talk, or is this real? And the more I got to know you guys and interact with Heather and Heidi, and my confidence level, the communication, you can tell pretty quickly whether you're comfortable with the people you're doing business with or not.
Yeah,
that. I mean, we've all been down that road.
So tell us a little bit about the feedback that you've gotten, or the communication, because it's good to hear from investors. We try to be kind of ahead of investors and keep you informed. But
yes.
Well, and let me tell you something. The whole thing about an accredited investor. I'm considered accredited, but I don't consider myself accredited. I just make decisions on individual projects. But every project, every communication has been quick, responsive, and handled. And you know what? In my whole business life, that's all I wanted. Communicate with me. Just communicate with me. If I need to do something, if I haven't signed something, if you need some, and I tell both Heather and Heidi, hey, new projects coming up. Give me give me a heads up and let me know. Yeah. Because I like this being laddered. Maybe just talk about that in the investment side, in bonds, being laddered in your bonds so they're maturing at specific times.
Yep.
By the way, what are bonds anymore?
3%.
Yeah, right. Yeah. On a good day.
But I think what you're saying with the laddered is you have some that are going to be coming up. They're kind of staggered over time.
Exactly. And at a point in time, if one matures and pays out, then I can make the decision. I'm retired, so I need to know, what my cash flow needs are going to be and what I'm planning for the kids, and whether I want to buy that Tesla that I've been dreaming about. But in the meantime, you can keep, if you start and ladder those or put them in different time frames, then you have the option of liquidating them or reinvesting them, and that's a great benefit, in my opinion.
Well, we're really happy you spent some time with us. We've talked on the phone. I think this is the first time we've met over the several years we worked together, but I think half of the time we talked on the phone, it was about driving to Mexico, because I have the same passion. But
right.
We're really happy you spent some time with us, and
my pleasure.
We hope to continue to have great projects together for many years.
Well, and honestly, I brought one of my sons in. I hope I can get my kids to consider, in getting involved and investing this way, because I think it's a good opportunity.
Yeah, would love that.
Yeah.
And I think that's one of the best compliments, when people bring in their friends and their family. And I know we've done something good.
Yeah, most of our investors come
us.
from friends or family. So that's we always track that really closely, where new investors coming from, and that's just like you would introduce it to your family members.
I've referred several people in. They've had calls. People move at different paces, have different comfort levels.
Right.
I don't need to be over communicated with. I enjoy sitting in on the streaming,
The live stream.
right?
Yeah.
The live stream and listening to other people's questions.
Yeah.
And listening to you guys update. But be honest, I don't read the updates that come through every week or every 2 weeks on different investments. I know what the timeline is, and that's it.